the session together with my colleague, Nana Abu. So Nana, you can project the screen. Okay.
Please confirm that you can see the screen. I'm sharing my screen at the moment.
Yeah, I can see it now. I can see it. Thank you.
Yes, now we can see it.
Thank you.
Yes.
Okay, so the topic for today, like I said, is from complexity to clarity, what SMEs must know about the new tax laws. And what we'll be doing today is to walk you through the key reforms that are reshaping Nigeria's tax landscape. And more importantly, what they mean for you as SME operators. Those are the things that we intend to achieve. Now, these changes are significant and they can't be fully covered in a 1 hour session, but we'll do our level best. But let's first of all acknowledge the sheer scale and importance of SMEs in Nigeria. Like Mr. Akinwumi mentioned, SMEs are very critical to the economy of Nigeria. Some of the statistics we've seen show that there are about 30 million SMEs that operate across the country. They account for about 84% of employment in Nigeria's workforce, and they contribute about 48% to Nigeria's GDP. And that's very significant. And those numbers are not just statistics. They are a testament to the resilience, the innovation, and the economic significance of SMEs in Nigeria, especially considering the very challenging macroeconomic environment that we have in Nigeria. So whether you're talking about agriculture, you're talking about fashion, you're talking about finance, you're talking about technology, retail, or education, SMEs play in all those spaces, and they are a major contributor of employment, helping Nigeria tackle unemployment and expanding local production and driving inclusive growth. And so what we will do today, I'm taking the introduction now, and then we'll dive into what you really need to know. After that, we'll have a Q&A session to take the questions that you have and would answer them. Now, talking about the reforms, there are 4 pieces of tax legislation that have recently been introduced in Nigeria. The first is the Nigeria Tax Act 2025, which consolidates fiscal legislation governing income taxation. So in the Nigeria Tax Act, you have the taxing provisions in there. You have the provisions relating to the exemptions that are available, the incentives that are available, the transactions that are taxable, the persons or categories of persons that are taxable. All those are contained in the Nigeria Tax Act. The second piece of legislation is the Nigeria Tax Administration Act 2025. And what that does is that it standardizes the procedures for efficient tax administration. And so the administrative provisions are contained, they have been consolidated in the Nigeria Tax Administration Act. So provisions relating to when you should file, which tax authority you should file your returns with, which return is due when, all those provisions are in the Nigeria Tax Administration Act. The third piece of legislation is the Joint Revenue Board of Nigeria Establishment Act 2025. And what that does is that it creates mechanisms for dispute resolution for harmonization of administration across tax authorities. And so there will be increased collaboration between the Federal Tax Authority, which will be called the Nigeria Revenue Service, going forward, with effect from 1st January 2026, and then the other tax authorities in Nigeria. And the last piece of tax legislation is the Nigeria Revenue Service Establishment Act, which essentially repositions the FRS and expands the powers of the FRS to act as a true federal tax authority. And so those are the 4 pieces of tax legislation that we will talk you through during the remaining 50 minutes that we have. And at the end of the day, we hope that you will take a lot of learnings from today's session. Our goal today is simple. It is to help you move from complexity to clarity. We will break down what the laws mean, how they affect your operations, and as an SME, you have more clarity of what you should know about the tax law. So at this point, I'll hand over to Nana, thank you very much.
Thank you very much, Akinwale, for that introduction. Good morning again to all the attendees present. It's an honor to be with you today to share our insights on the recent tax reforms in Nigeria. And just as Akinwale has said, we'll be breaking it down, removing the complexities associated with these provisions, breaking it down suitable and as it suits the SMEs operating in Nigeria. So I would start off right by saying that this session, right, it's important that the learnings from this session, are also taken further in terms of compliance, because as Akinwale had mentioned in his session, right, there's been a key change, or there's been key changes in the provisions, and it now requires, absolute adherence and compliance, across all levels and sectors. So it's important that you are abreast, you are aware, and you can also understand, some of these key provisions as it impacts your business. So some of the discussions we will talk through today would hover around, companies' income tax, would hover around personal income tax, value-added taxes, withholding tax, and then some key incentives that are available for the SMEs, to take advantage of and benefit from in respect of these new reforms. So firstly, as I'm projecting on the screen, there's been an expansion of the tax exempt threshold. And this is paying cognizance to the changing economic realities, prevalent in the country, right? Previously, what we used to have was that if you were earning income, when I say income now, looking at it from a company's income tax perspective, right? So if you were earning income less than 25 million naira, such entities were categorized as small companies and they were exempt from tax. However, there's been a game changer, taking into cognizance the value of the money of our current naira, the prevailing realities in terms of the economic landscape in the country. So that 25 million naira has been expanded further to about 50 million naira. However, there's also some additional, conditions and caveats to say that if you have a turnover of 50 million, not exceeding 50 million, and then your fixed assets, all the fixed assets you have deployed in that business is not exceeding 250 million, then you would be categorized as a small company and you'll be exempt from income tax. However, it's important to mention that if you're providing professional services like legal services, consulting, accounting, support services, in as much as your revenue may not be up to this threshold, you would not be categorized as a small company. So the exemption affordable to small companies will not be, available to companies that are providing professional services, irrespective of the threshold. Then it's important to also mention that even though as a small company, you're exempted from, paying tax. And when I say exempted, it means that it's not like you're clearly exempt, you're taxed at a rate of 0%. So eventually you would have a new tax liability. You also have an obligation to file tax returns, even though your liability is zero or nil. You have that obligation to file tax returns. There's also another update with respect to the income tax, which is the development levy. So previously, we used to have what is called the tertiary education tax and some other taxes that were applicable to companies operating in the communication sector, banking, financial services. Now, there's been some update where all those small, levies, like the Nigerian Police Trust Fund levy, the tertiary education tax, the NITDA levy, they've all been, consolidated, making the tax process seamless and easier. They've been consolidated as what is known as a development levy, and it's a 4% charge. However, this development levy would not be applicable to companies that are classified as the small category group of companies, right? Any company outside this threshold would then have to, bear this 4% charge on its accessible profits. And then we had previously what was called, we had three categories of companies. So previously under the current regime that will be changing by 1st of January 2026. We had companies classified as small, then we had the medium, and then we had the large. Small companies were exempt previously. Medium companies were taxed at 20%, and the medium companies category was above 25 million and less than 100 million. However, that medium-sized company has now been eliminated. So what we have literally are just two, categories: small company and any other company. So any other company above the 50 million threshold will be taxed at 30% and also would bear the 4% accessible 4% of accessible profits on development levy. And then we had another key change that is important is the effective minimum tax, right? This effective minimum tax is literally to align with some global rules and provisions with respect to companies that have operations across various jurisdictions to ensure that Nigeria is receiving its fair share of taxes among such group entities. And taxes are not, taxes that Nigeria ordinarily should earn or get or receive are not being, transferred to other countries. And what it typically says is that if at the end of the tax year, as you compute your taxes, you arrive at an effective tax rate that is less than 15%, you need to pay a top-up tax, additional tax, to equate your effective tax rate to 15%. However, this is subject to two conditions, where it's either if you are part of a group entity, so you're part of an entity that has operations in different countries, and that group operations, the aggregate turnover is 750 million euros. That's one condition. Then you would have to pay this top-up tax. And then the second condition is if you have an aggregate turnover of 50 billion or more in the financial year. So even if you're not part of a group, but you have that turnover of 50 billion. So in essence, this effective minimum tax, small company category are excluded from this. But if you're not categorized as a small company, then you then need to evaluate either if you fall as part of a constituent entity or your turnover is above the specified threshold. There's also been very stiff provisions regarding transactions with sister companies. So sister companies meaning companies that either you have the same shareholder or companies that one entity is vested or invested in the other entity. So you're related amongst yourself. So there's a stricter compliance regime where you have to ensure that all the transactions you're doing are in line with a specific provision called the transfer pricing regulations. And that guides all transactions that you carry out with sister companies. So you have to ensure that you comply with that provision. And then bad debts. So if you have bad debts between sister companies, right, they are no longer tax deductible. Before now, when you have relevant documents to support that bad debt, then you take it as a deduction that, that debt is indeed bad. But currently, if you have any bad debts from your related party, they will no longer be tax deductible. And then the process, I think Akimwale had touched on this previously. There's a simplification of the process. So it's expected that as you unify and consolidate various laws, the process for compliance, will become easier and simpler. And there are specific provisions in the Nigeria Tax Administration Act that provides that small companies, the process for their filing, the process for their audited accounts will be made easier. But this will be subject to some specific guidelines that the Nigerian Revenue Service, which takes effect in January, would roll out to make the process simpler for very small companies whose operations, are minimal, as mentioned. They're also very, I mentioned initially that the regulation is really changing with respect to compliance, and stiffer, measures are being put in place to ensure that the transactions that are being carried out, the earnings from those transactions reflect the activities that the entity has carried out. So one of those key things that I think is important, especially for those that are not paying tax at zero. So if you are not a small company and then your revenue is above the 25 million naira threshold and 250 million fixed asset threshold, you have to be very mindful of some of the transactions that you carry out. So in essence, where you have expenses in foreign currency that you have carried out to another party, you have to ensure that the exchange rates, right, at which you pay is equivalent to the official exchange rates. Otherwise, if you pay for such expenses in rates that are above or in excess of the official rates, then you would have to take that excess payment, and that excess payment will be taxed because it will not be allowable as a tax deduction. And then for VAT, where VAT is due, right, on your expenses. If you've not, those VAT, if they've not been charged, or import duty, if you import equipment, if those charges have not been paid, you cannot take a deduction, a tax deduction for items that you would have imported or purchased if you've not paid the appropriate duties. So it's also very important in terms of documentation, having all the relevant documentation to indeed support all the expenses that you would take as a deduction in arriving at your taxable profits where you are taxable. That is where you are outside the small category band. And then this is the deduction of tax at source rule, right? I think what is really important here is to ensure that suppliers, service providers that you render services to have a valid tax identification number, right? There's a very key and specific requirement to ensure that all taxpayers, and when we say taxpayers are entities that carry out, or individuals that carry out economic activities, right? So there's a very, very strong provision, right, speaking to this, to ensure that all taxpayers, irrespective of the fact that you may be tax exempt, but you must have a tax identification number. And some of this is also stemming from the need to, even if you need to have any contract with the government authority, if you need to carry out banking transactions, that tax identification number is critical based on the provisions of the Nigerian Tax Administration Act. And if you're carrying out transactions with other parties, for instance, you have the tax ID, they don't have the tax ID, maybe because they consider themselves a small company, right? There's a provision in the withholding tax regulation that specifies that if you're transacting with another party that does not have a tax ID, the amount that you're going to be deducting at source will be twice the specified rate. So if, for instance, your amount you're supposed to deduct for providing a service is 10%, the return tax rate, the amount that you then be subjecting to tax will be times 2, that's about 20%.
Okay,
Please confirm
let me
that you
just
can hear
continue
me.
pending when Nana would join. I think the other thing to pay attention to is the need for tax registration. She's touched on that. She's touched on the importance of tax of companies or businesses to have tax ID, because if you are dealing with an entity, a vendor that does not have a tax ID, you may be obligated to deduct withholding tax at a higher percentage, like she's illustrated. Um, the other part is to talk about eligible deductions or reliefs in relation to maybe contributions under the National Housing Fund, the National Health Insurance Scheme, and then the Pension Reform Act. And so for individuals that are paying personal income tax, the contributions that they make to these schemes, they are tax deductible. And in addition to that, there's a rent relief that is available to individuals that are living in rented apartments. The relief is 20% of the annual rent paid, or it is subject to a maximum of 500,000 naira. But there would be need to provide documentation to the tax authority, because the tax authority is trying to get information on the landlords, for instance, so that they can then ensure that the income, the rental income that's been earned by the recipient of the rent is the tax on it is duly accounted for. So those are some, and this will also apply to employers of labor. Many SMEs are employers of labor. Under the pay-as-you-earn tax regime, the employer is responsible for accounting for the pay-as-you-earn tax of employees, and the tax regime that would apply going forward is the new tax regime that is displayed on the screen. So I will pause here. Nana, I don't know if you're back, if you
Yes,
want to
please.
take
Thank you
over.
so much, Akinwale. Please confirm you can hear me, please. And apologies
Hi.
for the glitch. Okay, so thank you so much, Akinwale. I see that you've touched on the, personal income tax and PAYE tax regime and the obligations of the SMEs with respect to PAYE taxes of the employees that work for these SMEs. I would quickly talk through the value-added taxes. Similar to the comment I had around the income tax regime for small companies, for VAT as well, small
Hello,
companies.
Nana.
Yes,
Hello,
please.
Nana. Oh, okay. Sorry for the break in transmission. We have a feedback that you're a bit too fast. Perhaps maybe you can
Okay.
done. Okay, thank
Okay.
you.
Okay, thank you very much. So I would take it a bit
Okay.
slower. So I was speaking to value-added taxes, and I said that the tax exemption under companies' income tax still applicable to small companies under the VAT regime, right? As some of the participants may be aware, you are currently being absorbed from certain obligations when it comes to value-added taxes, and that is also still maintained in the current Tax Reform Act, right? So one of those obligations is if you meet that threshold of 25 million, right, you would not be, and they are categorized as a small company, you would not be required to charge VAT on your taxable supplies. You will also be obligated from filing, those monthly VAT returns, right? However, small companies have the option to opt out of this, I must add, but that provision exempting you from all of this VAT compliance obligation is still in place. Another key important change, right, is the reclassification of some essential products from exempt status to zero rated. And I'll just explain how this exempt and zero rated typically works. So typically the way input VAT works is that you would charge VAT on a taxable supply, a supply that when you're making a taxable supply to another party, you charge VAT at the applicable rate. However, you are also allowed to deduct any inputs that you have suffered. So you purchased an item and you use that item to create another item. Just an example. The input VAT that you suffered or you bore at the point where you were purchasing maybe the raw materials, other items that you required, right? You're allowed to net it off against the output charge that you would include on your invoice, right? However, the stay was if you are selling an item that is exempt, right? You cannot take that input VAT that you bought, cannot take it because the item that you're selling, you are not charging VAT. So the input that you have suffered, you have to either expense it if it relates to services, or you charge it to your capital expenditure as part of the cost of your capital expenditure if it speaks to an asset. So that was one of those key difference where if the item is exempt, you cannot enjoy the inputs that you would have suffered, right? But now what they then looked at is to say, companies are carrying out, selling items, selling goods, products that are basic items, medical products, pharmaceutical products that they would have incurred input VAT. So those companies should be allowed, to take it off. So they've moved all of this category from exempt to zero rated, such that when you're issuing out those invoices, for instance, you're selling an essential product or you're selling drugs, you would have put, instead of putting new VAT exempt, you would have VAT at 0%, meaning that you've charged VAT, but it's at a 0% rate. And then you can then net off all the inputs that you suffer to arrive at what is the actual VAT that you're going to charge or that borne by the company. So this key change has really, for me, it's a game changer because items that you could not take an input VAT deduction for, you'll now be allowed to. And they've also even expanded what you can take, input VAT on. Currently, you can take input VAT on services. Before that wasn't the case. You can take input VAT on capital expenditure, so large capital expenditure that you've incurred when you imported those items or you bought those items, or the equipment or the machinery that you're using for your production. You can take a deduction against your output VAT such that what is then being paid, would have taken recognition of the input that you suffered, right? And then if you have any input VAT that you're unable to claim, you're allowed to carry it, forward. And then VAT refund process based on the Nigeria Tax Administration Act has also been streamlined, making it seamless. And we're hoping that, as the government rolls out implementation, we're hoping that, this would also, come through. VAT refund process is now 30 days. So if you make a request for a refund and it's a valid refund, the tax authorities check, and within 30 days of getting a valid request that they have also validated, you can then get that refund, or you can use it to offset any tax liability. And this wasn't the case before. So before, if you have any VAT credits, you can't use it against another tax liability. Same for companies' income tax. You can't use it to offset. If you have a company's income tax credit, you can't use it to offset any other tax type. But this has really changed significantly, and it's expected that this would also help to manage cash flow restrictions that company will suffer, where you have a particular credit in one tax type, you can't use it to offset another liability from another tax type. So this is really a game changer, I must say. And then you also have a key change, which is the fiscalization of supplies for VAT. While this may not be applicable to companies categorized as small company now, it's important to be mindful of this, because the FRS also will get to the point where they want every taxpayer involved in carrying out economic activities to adopt this fiscalization system. And what is this system? It's literally making the process of you issuing invoices electronic. So instead of issuing paper invoices, PDF invoices, those invoices will pass through the system. The FIRS will validate them, stamp them before it gets to the recipient of the service or the purchaser of the good or item. Like I mentioned, currently the focus of the Nigerian Revenue Service is that companies that have annual revenue of 5 billion, right? They are starting with them by November, and there've been a lot of sensitization program. But the goal, based on the feedback we've gotten from the FRS currently and then Nigerian Revenue Service from 1st of January, is that small companies will be brought on board and other categories of company will also be brought on board. But the timeline for that would be specified, as the focus is on the large category of companies at this point. Now, having talked through a number of these key changes and how they impact the SMEs group, I know Akinwale had dwelled on the significant contributions that SMEs make, with respect to the Nigerian economy, the significant employment, your contributions to employment that the SMEs contribute. I think it's also important going, from the conversations, the significance of SMEs in the country is equally important to ensure that you take, benefits, advantages, of some of this provision, because it is not, in the words of a colleague of mine, it is not doom, right? There are, in as much as we're getting into a stricter compliance regime, it's absolutely important that there's clear understanding, there's clarity on the provision as it impacts you, the key areas that impacts your operation, your business activities, and some of those advantages that the SMEs can take advantage of, and help their business grow, right? The goal is not to remain an SME. Goal is eventually growth, right? So some of these key incentives within the Nigerian Tax Reform Act include: one, there's a tax incentive for agricultural sector. So if you're into the agricultural business activity, right, what is important, to note is that there is an incentive for a tax holiday of up to 5 years if you're a startup. So if you decide that, oh, the current business I'm carrying out, you want to branch out into the agricultural sector, the government also wants to grow this sector. And as we may be aware, there's been a number of initiatives covering this agricultural sector to boost production and economic activities within this sector. So there's a 5-year holiday where you would not be liable to pay any tax for carrying out activities in this sector. And what are these activities? Dairy production, livestock production, crop production, and all of that fitting into the agricultural sector. You also have incentive for exports business. So for SMEs that are currently carrying out export activities or looking to expand in that area, right? There are incentives where, subject to specific conditions, you could be exempt from income taxes. Subject to conditions as well, you could be exempt from value-added taxes. So these are areas that, for those that are not currently considering this, these are areas to also be mindful of. There's also, for SMEs that are operating in the real estate sector, there's also incentives in the real estate sector with respect to value-added taxes. So in terms of planning, in terms of your business arrangement or structuring, these are things that you can also consider. The government is also very mindful that, I think we're all aware that, the current situation of the economy, where the government focus is on protecting the vulnerable, those that are earning, significantly low income. So there are also some tax deductibility rules or exemptions. You get additional credits if you have employment of employees within a particular period, right? If you are able to increase their salary up to a threshold of about 100,000 naira, there are certain exemptions that you get, or certain credits, I would say, certain credits, additional tax deductions that you can claim, right? To help also reduce your taxable profits. So some of these key areas are areas, and these are just a few, right? There are a lot of areas that SMEs can explore to take cognizance of the benefits that comes with these tax reforms. And then I know Akinwale had talked about this, so I won't dwell too much. But the tax reform is not just the Nigerian Tax Act. There are other acts, that comprise the Tax Reform Act, which he had mentioned, the Tax Administration Act, the Nigerian Revenue Service Establishment Act, and the Joint Revenue Board of Nigeria Establishment Act. So I won't dwell too much on this, but I think what is important is that the Tax Administration Act specifically specifies stiffer penalties. And I'll just give one example, for instance, where you are required to file a tax return and you don't file that tax return. So previously, what used to happen is, for companies, for instance, who have a December year end, you're expected to file 6 months after. Companies that have been in operation for a while, not new companies, right? And then you don't file 6 months after. What is to happen is you pay 25,000 in the first instance of default, and then 5,000 for every subsequent month. So sometimes you have companies not really complying because the penalty is not so stiff, right? And what has been done now is to increase that threshold, where if you miss the first filing deadline, that's the deadline itself, there's 100,000 and then 50,000 for every subsequent month that you miss filing. So you can see that we've moved from a higher band in terms of even the penalty, and then other stiffer penalty charges for non-compliance as well. Now, having talked about all of this, what is the way forward for SMEs as you see it, as you ponder upon all that we have discussed today, as it affects and impacts your business operations, your activities? How, what are the key considerations, that you need to dwell further on, right? I think it's important. I cannot overemphasize, you need to stay informed. You need to stay informed. You need to be abreast of this provision and how they impact you, right? Through education, through training, through consultation with experts. I'd mentioned some, tax planning that you can consider in terms of how you want to comply and how you also want to ensure that you take benefit of these provisions. So being informed, consulting is really critical. Now, amongst your group, there are certain trade associations and the organized private sector across the various groups, even amongst the SME. We have the SMEDAN, right? You need to also be actively involved, right? As they advocate, for SMEs, if there are issues, if there are considerations for your sector, it needs to be tabled forward in a position paper in manners that would present the case of the SMEs and the impact of these provisions. It's important now that those conversations start happening. So you need to leverage your trade organizations, providing them feedback as you implement some of these provisions. I had also mentioned, utilizing the tax benefit and the incentives that come with these reforms, because indeed there are benefits that come with this reform. What one needs to be mindful of is, are you aware of those benefits, and how would you take advantage or take cognizance of them? Accurate documentation and record is critical. I think Akinwale had also touched on this when he mentioned the rent relief, for instance. That is a new provision within the PAYE regulations or PAYE provisions, that's pay as you earn provisions. So SMEs, this is a critical area. There has to be accurate documentation, accurate record keeping, having a process in place to ensure that all this documentation are kept archived properly in the event of reviews, and then having to also assess periodically, how it is that the company is performing, and not just in terms of economic activities, in terms of even exposures to various taxes, because sometimes tax issues could actually, make or mar a business, and then leveraging the appropriate technological tools, to enhance the process, enhance your compliance, and ease the filing process. So at this point, I would say thank you very much for listening. The essence of this discussion is actually to provide clarity on some of these provisions and to let you know that it is easy to understand, it's easy to comply with these provisions. As far as the SMEs, are cognizant and mindful of the things that needs to be put in place in terms of consultation, staying informed, and all of the conversations that we've had so far. So
Wow.
I would thank you very much for listening. And at this point, I would say that we welcome questions from you all. Thank you.
Wow. Thank you. Thank you, Nana. Thank you for that insightful session. Okay, actually, I thank you. Okay, we have some questions here on the Q&A chat. I have a question from some of the questions are bordering on the date of implementation or that the tax reform will take effect. Okay, so the first question from Nwanze is the new policy applicable to 2025 economic activities of 2026? Okay, I want to believe that what the question is all about is the effective dates of implementation and the likely financial year that the new tax reform will affect. Thank you.
Okay. Thank you very much, Mr. Kiyomi. So I'm projecting the slide with respect to the effective dates. So for the Nigerian Tax Act itself and the Nigeria Tax Administration Act 2025, it takes effect 1st of January 2026. However, the Nigerian Revenue Service Establishment Act, which seeks to establish the Nigerian Revenue Service, so to change from FRS to the NRS, takes effect from 26th of June 2025. And I'm sure if we've seen some of these communications from the FIRS recently, when they were rolling out the Customer Service Week, they had also touched on some of these changes with respect to them as they become the NRS. And then the same date is also applicable for the Joint Revenue Board of Nigeria Establishment Act, 26th of June. Now, it is expected that as the Act takes effect, which is 2026, 1st of January 2026, it's expected that activities that are carried out from that period, right, is what would fall under the purview. So if I take personal income tax, for instance, right, salary payments of employees by January 2026 should take cognizance of these changes. I take VAT, for instance, same transactions from January 2026 would be mindful, we take cognizance of the provisions of the Act. And then for income taxes as well, transactions from January 2026. However, right, I think it's also important to mention that over the years, we've seen the FIRS, especially with respect to the Finance Act. Immediately a Finance Act is released, right, we'll find out that it is the transactions that happened in the previous years, right, that they would say, oh, because the act was released this year, and you're filing your tax returns in the year the act was released, they then take your prior year financial statements that falls due this year and seek to apply it. And we know that there's been a court judgment or a ruling in that regard where it says that tax laws should not be applied retrospectively. However, we'll still wait for further guidance from the Nigerian Revenue Service because we expect implementation guidelines to be rolled out, right, to be able to, pause this further.
Thank you, Nana. We still have some other questions. Another question here is education sector part of VAT exemption? I think the question is simply, is educational sector exempted from VAT?
So for the educational sector,
I can comment on that.
Okay, Akinwale, go ahead.
Yeah, so I think it's to say that under the tax laws in Nigeria,
But
what is, can you hear me?
I can hear you now.
Yes, under the tax
Yes, we can
laws
hear you.
and under the Nigeria Tax Act, it is not sectors that are exempt. What is exempted are either goods or services. And so there are certain services under the educational sector that are exempt. So for instance, educational services that are provided and for which tuition is paid, for instance, at the primary, secondary, or tertiary level, there will still be exemption for that. There will be VAT exemption. Plays and performances that are provided for the purpose of learning will be exempt. So it is the service. There are specific services that are exempted. Educational materials are exempted from VAT, for instance. So it's services or goods that are exempt, and some of them relate to the educational sector. So that's how I would answer that question.
Thank you, Akinwale. Thank you. Let me see. Do we still? Okay, another question. Is how do we classify services provided by out-of-home advertising media owners? Services perhaps rendered by someone at home, rendering advertising or media services. Akinwale, did you get that?
So I suspect that question will touch on the comment that was made by Nana about the definition of a small company and the fact that a company that is involved in the provision of professional services will not qualify as a small company. So generally, where a certain line of business or profession requires some form of licensing or requires some form of accreditation, those kinds of services are typically considered to be professional services. So if you take, for instance, the accounting profession that is regulated maybe by the Institute of Chartered Accountants of Nigeria, services provided will be seen as regulated. So for advertising, to the extent that the provision of the service in question would involve maybe the advertising, the regulator in charge of advertising in Nigeria to also regulate that kind of person, then it is likely that that service will be considered as a professional service. So
I think he may have gone off. Please confirm that you can. I think Akinwale may have gone off, right? But just to put a summary, I think the network, because the network logs off sometimes. I don't know why, right? But I think just to summarize what he was trying to say, right? To the extent that that service is not categorized as professional, where maybe you require a certain certification, right? You could still be categorized as a small company. But if it is classified as professional, where you need some sort of certification to be able to render that service, then it may not be classified as a small company.
It's regulated. It's operating in a regulated environment. Okay. Lastly, have another question is on VAT. I think what this person is trying to confirm is operating the plumbing industry.
That you carried out, right? To the extent that you can clearly, segregate what it is that is the out-of-pocket or reimbursement, right? And what is your actual service fee or cost, right? To the extent that you can segregate that and you can have all the relevant support to justify the amounts that were out of pocket, the reimbursables, then VAT should not be applicable on the reimbursable elements, but on your service costs. But like I said, it's subject to having to be able to segregate and ensuring that the arrangements that you have clearly segregates this, even the invoice that you're raising, because if you put everything together as a single cost, then the expectation is that VAT will be applicable on that cost. So there has to be adequate documentation and segregation across all documentation levels to be able to say that the reimbursable cost is indeed a direct out-of-pocket or recharge, and as such, VAT would not be applicable.
For response to that, okay, you have to provide all relevant documentation to be able to claim those items as being reimbursable. We still have some other questions here, which borders on personal income tax. Another one says, can small companies with turnover less than 50 million charge VAT for supplies to clients? And can the business also pay input VAT to our suppliers?
So, when I was presenting, I mentioned that you are exempt as a small company, right, based on the threshold specified in the Act. You are exempt from charging VAT on your supplies, right, as a small, to the extent that you meet those conditions, right? And this example, you meet the condition from this example that has been given, right? However, companies can decide to opt out of it. You just have to notify the FRS that even though you're a small company, you have an expectation that you would cross this threshold and then you want to start complying. So companies can opt out, can comply by charging VAT, even though their revenue is less than the threshold or within that threshold, they can actually comply, but there has to be a notification to the tax authority that even though you're exempt, you want to comply.
Okay, so ladies and gentlemen, our time is up. We'll be collating every other question and we'll try as much as possible to respond to them. Okay, I have the permission to take 2 additional questions. Okay, this one is so crucial. He said, is there an online option for creation of team to ease the acquisition of team, especially for, okay, I think the question borders on how to generate or to get tax identification number. This person, Owanze, is trying to confirm how the ease of getting tax identification number.
So,
hello, Nana. Hi there.
Yes, I'm here. Please confirm
Okay.
you can hear me.
Yes, I can hear you clearly.
Yes.
Okay. So for the tax ID, right? Yes, a number of tax identification number, if you're an individual, right, is tied, or an unincorporated entity, you're not a company, is tied to where you reside largely, because it's your residence that will determine which tax authority you'll be paying tax to, right? And then for companies, as we are aware, it's the Federal Inland Revenue Service, currently to be Nigerian Revenue Service. So for the FRS, they've also automated their process when it comes to TIN generation. In fact, at a point where you're trying to incorporate as a company, right, you would ordinarily have a TIN attached to that registration as a company, right? So that process is also automated. For individuals, like I mentioned, it's tied to your where you reside. So for those that are residing in Lagos, for instance, there's this e-tax platform of the LRS that is also an automated process. I know of Rivers State as well, who also use that automated process where you don't have to physically, go to the tax office, make a formal applications and the like. You use the online platform. There will be a portion there to register as a new taxpayer, and there's that option. So yes, for a number of the states and for Federal Inland Revenue Service, that process, has been largely automated. Sometimes you may then need to also maybe follow up with the FIS where you've logged those things and you're not getting feedback, where there are maybe technological issues, but the process has been largely automated.
Okay, thank you, Nana. So the response to that, the process has been automated to a reasonable extent. Tax identification number can be generated online, and it can also be generated even depending on your state of residence, Lagos, Rivers State, and I think some few other states, as mentioned. Another question says, I'm an employee of IT company. I have been paying PAYE, right? How does this tax reform affect me? Will I start paying extra tax based on transaction on my personal accounts? So this person is trying to confirm if perhaps aside from his salary, that his personal transactions will be subjected to tax. Nana.
Okay, so
serious issues.
thank you, Akiomi. As you've rightly pointed out, indeed, serious issues, right? So under the current, or the new tax regime, I mentioned that there's stiffer and stricter compliance. So all income, right, to the extent that that income is not a non-taxable income, right? All that income would have to be reported. If you are aware, while employers by January, they're expected to make a filing or a declaration of all the emoluments to employee and the taxes paid, we as individuals, by March, we're also expected to report to the relevant tax authorities, right, our income earned, right, and the tax, applicable. So if you have additional income besides your payee, that's the additional income besides your employment income, right? At the point where you're making those annual declaration in March, you're expected to disclose, all the income, and the ones that are non-taxable, they would be obviously taken off. The ones that are taxable, you then apply this tax band. So you're going to arrive at what your total income should be that are taxable, and then you apply the tax band. That's the parts that I'm showing on screen, the red or pink section, right? So depending on where your income band stops, that will be the rate that will be applicable to you.
Okay, Nana, thank you. Quickly, we have another question here. It said, where can we get the breakdown of tax deductions and the rates for personal income tax under the new system? So it's trying to confirm where and how we can get this. Okay.
So just to confirm, this rate is in the Nigerian Tax Act, right? It is specified under one of the schedules on the Nigerian Tax Act. So when you go through that act, which is a very lengthy document, right? Which is why I said there's the need for you to leverage experts, right? To support you, as you navigate these laws. So the Tax Act provides the bands, the specific rates. I'm also showing that on screen. So if you can see the screen, you can see, depending on the category of your income, the applicable rate of tax is as presented on the pink or the red section, depending on what is visible from your end. And then even the deductions as well, the eligible deductions, Akinwale had touched on this. Pension is deducted, National Housing Fund, if you're contributing to National Housing Fund, contributions to pension, all of these are also deductions. They are all contained within the Nigerian Tax Act.
I hear you. I have another question from Kemi.
Okay, because we need to, apologies, I would need to go into another session, but I can quickly take this.
Just this one, please. This person is trying to confirm rent relief rights for couples. Take, for instance, myself and my wife, we are working in different organizations. We pay rent. So we want to take advantage of our receipt in claiming relief. Is it Mr. Akemi Karunwi or Tayo Karunwi that we, or both of us, can use the receipt in taking advantage of the rent relief as included in the Nigerian Tax Act? Thank you.
Okay, so based on the provisions of the Nigerian Tax Act, the rent relief, right, is 20% of your annual rent paid, subject to a maximum of 500,000, right? So if you and your spouse jointly contribute to rental payments, right, and you earn taxable income that will be subject to, this payee tax, each individual, subject to the contribution that you make, right? So if your wife, both of you, for instance, and permit me to use this example because the prevailing, situation in the country, the rates of rent that people pay, is quite significant. But if, for instance, 20% of the rate of your spouse is, let's say, 200,000, right? And 20% of your own rent is, let's say, 700,000, just giving an example, right?
Yeah.
Your spouse would be eligible to only 200,000 based on what she has paid, right? She can't take 500 because it's subject to a maximum and she's only paid 200. So she would take the 200 as a relief. Why you can't take 700 because it's above the maximum of 500. You would then take 500, subject to both of you having contributed, evidence that you contributed, your outflow, this bank statements, and any other information that the Nigerian Revenue Service may request to ensure that indeed you're not taking a claim that you shouldn't take a claim for.
Wow. Thank you, Nana. Thank you, ladies and gentlemen. We are sorry for taking your time and going beyond the agreed time. So on this special note, we want to thank every one of you for joining us on this session. Thank you. We appreciate every one of you, all our esteemed customers from far and near. We want to say big thank you. We want to thank the management of Keystone Bank for sponsoring and organizing this very insightful session.